My name is Robert McCall. In today's lesson, what I want to show you guys is I want to show you guys the easiest strategy to trade US30. Okay, so I have US30 right now, and what I'm going to be doing is I'm going to switch to a daily time frame and then find my ranges. Okay, so I'll be explaining to you guys why I use these type of ranges to predict market movements. Okay, so my first range is going to be around this point. My second range is going to be around this point. My third range is going to be around yeah, basically around this point. My fourth range is going to be um around this point. My fifth range is going to be around this point. My seventh range is going to be my sixth range is going to 1 2 3 4 5. Yeah, so my sixth range is going to be around yeah, around this point. And then my last range is gonna be around this point. But I'm just gonna add one more, so I'm just gonna have it here. Now what I usually do is I'm trying to refine this, right? So I double click on this, and this is fine. Double click on this, right? And then I adjust this one. I'm gonna take this to the 4-hour time frame just to see things much clearer, right? I'm gonna adjust this line and put in zeros. I'm gonna adjust this line and then put in a 1000 1000, yeah, oops, 3 zeros and then 1 2 3 4. Oh, 1 2 3 4. All right, so this is what I'm gonna have. I'm gonna adjust this one too, right? And then this is also what I'm gonna have. And then I think I'm gonna leave the rest like that, right? Let me adjust this one. What is it? 1500. Okay. And then this is gonna be the last one. So why do I have these numbers, right? What I'm gonna be saying, what I'm gonna say about these numbers is that anytime we want to buy something, right? Prices are usually, we want to buy something when it causes $10, right? 20, 30, 40, 50, 60, right? We don't want to buy something when it causes um $10 point, some kind of random or definite, sorry, decimal numbers, right? So we don't want to buy something when it's like 10.42, 10.43, right? We want to buy things at precise and accurate points, like 3,400, 4,500, 450, right? But 420 is not really that good, right? 450, um 500, 550, things like that. So what I usually do is I look for these numbers, right? Which basically the difference between these numbers is 500 pips, right? So usually if I'm taking my entries based on these lines, then my target is always 500 pips, right? So I'm risking 50 pips or 20 pips to get 500 pips, right? That is a lot of risk, that is a lot of reward. So now let's see how we trade based on this strategy. Now what I'm doing is let's see how market plays off in these ranges, right? Right from this region, we see that market went all the way up to this, right? Which is about 2000. No, that's this actually 1500 pips, right? So market went all the way from this side to this side. Our next zone was this one, right? Our next one was this one. Market came back to this region to form an equal low and then broke this equal low, right? Came back to this to retest this as what, equal highs. Came back to this region, this zone in between, this was playing out. The next zone was this, right? So based on this strategy, where I'll be taking my entries is exactly on this line, because we can actually see how the market reacts to this line, right? Anytime the market gets to this place, the market pulls down, gets to this side, goes back up, right? At this region, we could see that the market actually reacted to this line, right? Where the market went up to this, which is 500 pips, market pulled back into some type of supply that we had around this region and went back up, right? we had a huge spike all the way down, right? Market came back to this side, forming what equal lows around this region, right? And then market went back up. Now we see how these lines are being reacted, right? So like I said, if I want to be taking entries, then I want to be taking entries exactly on my lines, right? And then you don't just take entries just based on one strategy, right? You need confirmations, so you can actually use price action, which has support and resistance, right? So you look at your zone, what is exactly happening, what type of price action is happening around your zone. Do you have some type of equal highs? Do you have equal lows? Do you have like a support and resistance? So an example is going to be around this region, right? Price literally came here because we had a support region around the side, right? And why do you think price came here? Price came here because we had what, a break of structure and then a retest on this what, um resistance that became what, our support level once it got broken, right? Around this region we also have what, a support level around this region where price literally came back to retest this support region and then went all the way up, right? Currently what price is doing is price is actually ranging in between this. This is a place, or this is a point where you use a different strategy to trade, right? You don't trade based on these lines when you have a very choppy market, right? Around this region you can actually use the same support and resistance, but you'll be trading in between the zones, right? What I'm actually seeing on this consolidation is that market is not going above this level, so this level is going to be my what, my resistance. Market is not going below this level, so this level is going to be my what, my support. So all I'm doing is waiting for price to hit one of these levels and then I take my entries. Price hit this, I take what, a sell trade to the downside. Price hit my support, I take a trade to the upside, just like that, until my zone get broken, right? So if price should break to the downside, then I wouldn't be looking for sell trades because we also have a very strong zone here. So you'll be looking for price to react to this level and then probably go back to this level, or come back down and then break all the way to this level, right? So even though price breaks this, you don't sell all the way down here, right? Because you have a level that has to be what, retested. These are very strong price zones where price usually tend to what, react to. So this is the easiest strategy that you can find on YouTube on how to trade US 30, and you can actually apply this in as 100.